Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Matt Cole, CEO and Chief Investment Officer at Strive, to discuss what macro themes will play out over the next few years and how to position for that. Matt, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Excited to be here.
All right, you got it. And the market seems to be thinking so near term right now. What themes do you think are going to play out in the longer term, perhaps over the next several years?
Yeah, so we really like to think about basically the next market cycle. And there's 5 key themes that we see playing out, call it out to 2030. And the first of those is something that's talked about quite a bit, but I still think it's underappreciated. And that's the end of the 40-year Treasury bull run, where the 10-year Treasury effectively rallied from over 15% in the early 1980s to less than 1% a couple of years ago. Now it's been rising with the 10-year right about 5%. We think that rally, it can't continue, and that just whether the Treasury flatlines and enters a range, which we see as the most likely scenario, or it continues to rise up, that the end of the Treasury bull run has drastic implications for financial markets. So that's macro theme number 1. The second is continued tailwinds for deglobalization. And so that's both nearshoring and onshoring. COVID, again, was what sparked the trend towards discussions of deglobalization. We think that continues. Also, we've been calling out since day one of Strive the last year, but I think we're obviously seeing this play out now, is heightened geopolitical tensions. We think those are going to continue. Those are a long-term trend, at least for the next business cycle, that also are going to have some implications for financial markets. Number 4 is a global fiat debt crisis. There is a debt crisis not only in the United States, but also in the world. And we see fiat currencies showing continued signs of cracking over the next several years. And then lastly, sustained higher inflation. We think inflation is going to continue to rear its ugly heads, and it's going to continue in fits and battles. Sometimes it won't. Right now, it doesn't look horrible, but we think it's not going to be a problem that goes away anytime soon.
So Matt, what looks attractive to you based on those macro themes?
Yeah, several different things. That view of the world is not, in a sense, a positive view of the world. As an investor, though, it does create many opportunities. And the first of those is a super cycle in oil. And we see oil prices hitting as high as $400 a barrel by 2030 due to all those different macro factors that we previously discussed. Also, though, there's been a systemic underinvestment in drilling, and it's been directly aided by the ESG movement. So that's number 1, a super cycle in oil that's going to directly benefit oil stocks. Secondarily, and this is somewhat related, but a new FANG popping up. And so if you think about the FANG from the last business cycle, tech stocks, large tech stocks, we think that there's 5 sectors that are poised for outperformance, fossil fuels being one. Geopolitical tensions will aid aerospace and defense. All these different factors that will support value stocks, we think directly are going to support the agriculture sector. When we think about related to fossil fuels, this systemic underinvestment in energy, we see an energy need that won't only be able to be met by fossil fuels. We think it's going to aid the end being the nuclear sector, that solar, wind aren't going to be sustainable enough to meet the energy demands. And we see nuclear actually getting acceptance as the cleanest and most reliable source of energy. So we think demand for nuclear is going to rise. And lastly, gold. So both gold is an asset, but also gold miners we think are poised to do very well. Another thing that we think does very well is the value sector. We think value is going to outperform growth, but it's not just all value. We see actually some trouble with the banking sector within the value stocks, but generally think that value stocks are poised to do really well. And then lastly, Bitcoin we think looks extremely attractive.
Let's go back to inflation for a moment here. You had mentioned that inflation is going to be higher for longer. I would imagine your view is the same for interest rates as well, that we'll be in a higher interest rate environment due to the fact that inflation is going to rear its ugly head longer.
Yeah, exactly. And so we like to look at things from different scenarios. And so I think there's 3 different scenarios that we see as possibilities for the 10-year. One of them is a range, and that's what we see as the most likely scenario of, call it a 3% to 6% range. So inflation, higher sustained inflation, that's going to lead to higher sustained interest rates in that 3 to 6% range. but we think the most likely scenario is it doesn't get out of hand, at least over the next several years. If we were wrong, we would think that the more likely scenario of us being wrong would be that interest rates actually move above 6%, but that's not our base case. And then the least likely scenario that we see is a return, sustained return to under 3% for the 10-year.
Right, but if you think about it, 3 to 6% from a historical perspective, that's not high at all. I mean, it's actually a little bit lower than historical.
It's definitely lower, but what's changed is that for 40 years, you had a sustained downtrend in rates, and that had implications on stock equity, stock bond correlations, the value of stocks, and that's different. So even a range trade for a long time, we think does have implications for the markets that we don't think are fully priced in.
Do you think that lends to your Bitcoin thesis as well?
It does, and so I mentioned that we're very bullish on Bitcoin, and part of that is the near-term potential for a spot Bitcoin ETF that has many people excited, and I think it does provide a tailwind for an easier flow of money into the asset. But it's actually the macro environment that gives Bitcoin the potential for a sustained rally. So those macro themes of sustained higher inflation, geopolitical tensions, the global fiat debt crisis, those are all supportive of Bitcoin, not just because of the limited supply of Bitcoin, but I think when you also think about, well, what gives Bitcoin lasting value, and whether you personally agree or not, or your listeners personally agree or not, millennials and the younger generation, like myself, believe Bitcoin is a store of value. And so we think this next market cycle pushes Bitcoin well past six figures.
All right, appreciate the insight, Matt. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.